the world. Let's now move to the big story coming in from the United States. Since the beginning of the US President Donald Trump's tariff carnage, the question remains, who will benefit from these tariffs? Trump and his administration have repeatedly claimed that this will benefit Americans, but reports and analysis say otherwise. Analysis show the tariff hike is set to push inflation higher in US. According to Center for American Progress, Trump's tariffs could cost the American households an average of $5,200 every year. Recent inflation data suggests surge in inflation levels were not as high as it was anticipated. So the question remains, how is the US dodging this inflation bullet? Analysts believe this is largely because American businesses are switching to countries that enjoy lower tariffs or to domestic producers. Yet another reason to it is that in June, US imposed tariffs on only 48% goods. According to Barclays research, the report claims ultimately these tariffs will largely be shouldered by end customers, even if it does not reflect right now. Meanwhile, Fed Chair Jerome Powell, in his Jackson Hole speech, gave a tepid indication of a possible rate cut on the back of uncertainty. He added higher tariffs have begun to push up prices in some categories of goods. That's not all. He added that it will take time for tariff increases to work their way through the supply chains and distribution networks. He stressed tariff rates continue to evolve, potentially prolonging the adjustment process.
Higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months, with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process.
Joining us now to discuss this further is Adam Posen, Chairperson, Peterson Institute of International Economics. Professor Posen, thank you very much for joining us. Let me begin by asking you, Jerome Powell has signaled that the rates could come down marginally. What's your estimate in terms of to what extent can the rates come down and what factors will determine it?
Thank you for having me on Global Lens. I think that the chances of a rate cut of 25 basis points at the September FOMC meeting are extremely high. You would need a very strange sudden jump in inflation in the one remaining data print between now and then, and for it not to be clearly attributable to any one factor. The rationale is, I think, a little less clear than the forecast. There are a lot of things, as Chair Powell said, that are going in opposite directions, including the tariffs, as you just covered. There's not going to be clarity on the impact of the tariffs for some time. I am in the camp that I and my institute, the Peterson Institute, have argued that the tariffs are going to be quite inflationary and destructive for Americans, but it is going to take time for that to show up.
Right. You know, I would also like to ask you about your piece in the Foreign Affairs magazine, where you've spoken about the long-term impact of Donald Trump's tariff strategy, his economic policies, and what will that do to the position of America as an insurer? Investing in America or using the American dollar system was a sort of insurance, and something that the world and companies believed in. Now, there have been constant attacks on the Federal Reserve's independence. There have been attacks on Jerome Powell. Donald Trump has repeatedly called him slow. What does all of this do to the position of the US dollar in the global economy?
I appreciate your discussing this broader aspects of the picture because I think understandably people tend to focus on the tariffs and the very high-profile economic conflicts, and obviously what's gone on between India and the US governments over the last few weeks is a good example of that. But there is a bigger picture. The US, even though not everybody loved it and even though it wasn't always fair, the US in the broad since World War II has been providing insurance to various countries, various multinational corporations, global investors in the form of property rights, military security, but also critically, as you implied, the dollar, that you could get in and out of treasuries, park money there. It wouldn't lose value. You're making a trade wouldn't affect the price of the trade. And as long as you weren't sanctioned, you could get in and out safely, securely, privately. I think the change in administration and what they're pursuing fundamentally changes that, and it goes together. It's not just the tariffs, but it's also the attacks on the Federal Reserve independence, as you say, the attacks on rule of law and individuals in the US, the attacks on migration, the attacks on military alliances. I think this is going to be a worse world for everybody, including the US. The dollar won't go to zero. The US will still be able to fund its debt, but it will be at higher interest rates with more volatility and less favorability towards the dollar. And people, including investors and businesses in India, are going to hedge more, and they already are. They're going to keep more money in gold, keep more money in crypto, keep more money in timber and natural resources, as well as the euro and at home. And over time, India, foremost among the major emerging markets, also Indonesia, Mexico, Brazil, Turkey, are going to be relative gainers in this world. It's still not going to be a nice world, but the relative value and independence of their macroeconomic policies will go up.
Right. I would like to ask you, you spoke about India. Donald Trump has imposed additional penalty tariffs on India of 25% on top of the reciprocal tariffs of 25%, which are already higher than other economies in the region. By the 27th of August, our tariffs will go up to 50%. Where will that leave India? What will be the larger impact of US policies on India, our economic growth, our position in the world due to Trump's policies?
I think it's a very foolish, short-sighted set of policies, to be honest, both in foreign policy terms and also narrowly economics. If you're going to put on tariffs, they should be as broad and as flat as possible. That's the only justification. Or they should be on very, very narrow, specific national security issues like export of high tech to China. Neither of those apply in the Indian case. There are areas of the Indian economy that are highly protected. At times, Prime Minister Modi seems to want to take that down. At times, he doesn't. But India is growing. India is fundamentally going to be a market economy. India has great potential and should be welcomed by the US. In terms of what the implications of the tariffs, I think they will be mildly negative for India in the short term. I think in the end, this will lead to reallocation of Indian activities and investments away from the US and greater trade with others. We see India pursuing that with China now in a very formal way. We will see what else happens. But I think ultimately the US is harming itself and its closest economic allies, places like Canada and Japan and the UK and Mexico, much more than it's harming India, which for better and for worse, and at the moment for better, has been less integrated with the US. The final point is the impeding of migration, the impeding of technology and visiting students and flows of entrepreneurship that the US is engaging in is horribly self-destructive. And that's where I think the losses to India will be most clear.
Right. What is going to be the long-term impact on the US economy? What Donald Trump is doing right now with tariffs, also with attacking the Fed, US economic institutions, America's closest allies. Will status quo be achieved once Donald Trump is out of office? I'm asking you this because you've written deeply about the new economic geography, who profits in a post-American world. What will be the position of America once Donald Trump leaves office?
I'm very grateful to you, Parikh, for mentioning the title of my article. It's available for free on our website, pie.com, and Foreign Affairs. The new economic geography is one in which the U.S. is decentered. We'll have less sway over the capital markets. We'll have less sway over technological standards and brands. We'll have less sway over other countries' security policies, with the exception of a few who, the closest allies, who will force to stay in line. We'll have less of a huge share of direct investment coming into our country. And ultimately, we'll have a more volatile dollar and higher interest rates on U.S. government debt. It's not going to go away. The U.S. isn't going to go away, but it is going to be decentered. And part of this new economic geography is no one can trust the Chinese government either. So there's just going to be less insurance for everybody, for multinational companies, for smaller open economies. And so people are going to have to self-insure. They're going to have to hedge. They're going to have to build up cash buffers. They're going to have to diversify in ways that go against economies of scale and economic efficiency, but against bad outcomes. They're going to have to find second best markets and second best suppliers. Over time, this will evolve. And you said in the new economic geography, does the U.S. revert back to normal? The longer this goes on, the harder it is for the U.S. to get it back. We have to think in terms of like Germany and Japan after the Second World War. You have to rebuild trust through active measures. And I don't think unless the U.S. economy crashes and Trump is really rebuked in the very near term, I fear this is the way it's going to be.
All right, we've run out of time, but thank you very much for joining us, Professor Adam Posen, focusing on Jerome Powell's speech at Jackson Hole, also telling us the long-term damage that some of the U.S. president's policies could cause to America and its closest allies, India, as well. We take a short break.